gentlemen traders, I want to show you guys my entry strategy of gold. Let me say last week, entire last week. If you look at this daily candle, you realize so the chart wasn't up to here. So what I'm going to do is I'm going to try to show you how you would have approached this chart if it wasn't playing. Remember, all of this zone wasn't playing already. All of this zone wasn't playing already. So we couldn't have jumped into trading such a zone. So therefore this is where we were supposed to focus on. This is the zone we were supposed to focus on. And moreover, we know that in forex trading we talk about imbalance every day. So guys, this is where we were supposed to focus on. So all of this section hasn't happened yet. All of this hasn't. This is where we were. Let's just say this is Friday, Thursday, Wednesday, Tuesday, Monday. So the whole of this section is the week we are. This was the last week. Yeah, so we have this fair value gap here in the middle, and now this trend has been pulling up. So we are just trying to get an entry strategy to see how to trade this zone here. And we have this here, this candle here, this one. We have it here with a long wick. Let's just say gravestone. We have it there. And looking at this, we also have another engulfing up here. So moreover, anyways, we are just going to see how to enter this trade. And if you go to the weekly time frame, you will realize that we have a gap that gold need to close up here. Here, this is the gap here that gold hasn't closed. But if you look at this weekly time frame, you realize that gold will definitely give up an uptrend. So let's say here. Now, if the trade is here, you expect, you know that every market imbalance need to be filled. This is where the trade is. And now for this trade to project from here and going up, this is what we do. We go to the daily time frame and see every obstacle we have on our way. Remember, the trade needs to go up. So this is this zone here. This is the zone here, the fair value gap that we have to be filled by gold. And we also have another small one up here, another small fair value gap up here. So we also take this fair value gap as well, and we also mark it up. Yeah, and we also come here, we fix this fair value gap properly. So this is a fair value gap we have, though mitigated, but the fair value gap will still hold, guys. So never minimize what gold will do. Now for us to get to this zone, you see it comes up, it did not pick it down, it came down. So here I would not really like to go there because I traded that. So and then go step up somehow. I was going up already. If you look at this is it was supposed to be an uptrend going already. So guys, never you make that mistake. Of course, marking the zone is the current low. If you take this zone, this is the current low the market created, and we are seeking the current high up here. So let me just put lines. This is the current low down here. This is the current low of gold, and then this is the current high over here. So anyways, this is it here. So we have high, low. What do we expect? We are expecting a higher high up here, as a matter of fact. So gold needs to continue towards that direction. Moreover, even if it doesn't get to that point, we have fair value gaps all along that we need to fix. We have fair value gap everywhere to fix. So it is not a fixed story. Gold will definitely reach this zone someday. So guys, never mind. These are all gaps to be filled by gold. So how do we approach this? Look at the fair value gap here. If we see this fair value gap here, this is how we take the trade. So this is our focus here. Okay, this is our focus here. This fair value gap left by gold here is our focus on how to trade this pair. So that was what I was looking for with my students. So what happens is, how do we approach this sell trade? After, during the last week, we have this candle here with a wick. That was to tell us that now we are supposed to start selling, of course. And when this candle closed down here, what was the next approach? We mark it, and most of my strategies, I can wait for up to 50% of this week to take the trade down so that it should fill this fair value gap. That is how it works. Okay, so what happens is once this candle comes up here, I am very ready, because if you go down to 4-hour time frame, you realize that this is the high we are talking about here. So now this candle went up, we realized that we have so many fair value gaps. Of course, we need to fill them, and now the market left us here. The market left us with this wick up. So how do I follow the chart? How do I follow the chart? Everything begins to look like a ranging market around the zone. We see like we have a ranging market around this zone. But you need to know that when there is a ranging market, before the price moves the direction, which this is your direction coming down, is supposed to be your direction. So price was supposed to leave here and come down, like we are going to fill the fair value gap here on daily time. So go back to the 4 hours. We are looking for how price goes down. Now we know that because of this, price cannot just come down. Price need to keep liquidity, to pick liquidity up. So what happens? This was my expectation. The price will do this. Price will do this first. The price would have supposed to do that. Let's say this, targeting this fair value gap here, and then picks up somehow here before the price will start coming down. Pull out somehow here from there before the price will now come down. So this was what I was expecting to happen, and let me say it worked because I had this trade. And if you look at this trade, even if it is with the smallest lot, you have up to this zone down here, that is 227 pips. So we have this break of this ranging and we follow. But moreover, this is how I would have taken it: the arrow down first, I wait for a pullback or a liquidity sweep. So suppose that this is liquidity is taken already, because the wick of this recent candle here, closed this candle here. The wick of this candle has just closed under the recent high. So it definitely means that this is liquidity. And if you go down to 5 minute, 1 minute time frame, you will see a QM. And if you look at this candle that formed this week and the recent one, you realize that we have a fair value gap, a gap. And because of this gap and the liquidity, therefore the market trends downward. So follow the market downward. On the Monday, I'll be making a live stream on how we can take a trade considering the filling of this gap here. This is the filling of this gap. And remember, not because the trade will just reach here at this gap, that means that we are succeeding, like we are supposed to take a buy immediately, like from here. No, we are not going to take a buy immediately from this zone. We are not going to do that. We are expecting gold with all our time experience that when gold reaches here at this zone, it's going to have a little rejection, exactly just like we saw here. Then it comes down to sweep out liquidity. This must happen. This liquidity must happen before gold start rolling up. Why do we say so? To all of you who are lucky today, if you look at silver, which is a correlated pair with gold, why gold has reached this order block for gold already, this order block has been taken. But for silver, this order block has not been taken. Of course, this automatically tells us that this trade is going to fall down. Silver is going to reach here before we start having a retracement to the upside. That is what is going to happen. So if you look at gold very carefully, you realize that gold hasn't reached that point. This is it. We realize gold hasn't reached that point. So automatically, we are expecting this pullback here, and as a liquidity sweep as well. We are expecting this zone to be broken as a liquidity sweep. Then we have our trade rolling up from here. So good luck everybody. That is the kind of trade we'll be having on Monday. Thank you.